Hello everyone. Today our topic is about bank trading zones using multiple time frames, and it's a smart money concept trading strategy. The market is in a very strong bearish downtrend. And by the way, it's a euro versus British pound on daily time frame. So market is in a downtrend and it's a bad situation for the buyers as the market is constantly creating swing highs and swing lows. So the buyers here will be thinking that as long as the price, when the price is breaks the swing high, then the market can shift their price action and can deliver the price towards the upside using the market structure. But here they did break the structure here, but they shifted the trend down towards the downside and took the liquidity of those traders who were looking for buying on that spot or looking for buying inside these daily time frames or 4 hour or 1 hour time frame bullish institutional candle inside. They have been liquidated, and before liquidating them they have given you a lot of confirmations. As you can see, it was a price action. It was a good price action for the traders to took a buy trade here, and when they took the buy trade they let the price go higher, and after letting them taking the buy trades, they shifted the price towards the downside by creating sell orders and liquidating them. As the price action traders, we know that using smart money concepts, price beneath the swing high and the swing lows, there are liquidity. And as the market is constantly in a downtrend, that is the reason the price created a swing high and break the structure for some time to let the traders in. And as they are in and there is a range, that we know that when the price is in the range, they love to liquidate. So that become the reason of this liquidation. So as they have liquidated that low, now we know that in order to take the buy here, we need the bullish institutional candle. What is bullish institutional candle? The long candle that is red right now, we want the price to deliver the price towards the upside with a good bullish momentum so that we can look for buy. So let's see what the market did after that. So the market makers open the big buy orders, and now the open of the price and the low of the price has created this bullish institutional candle. Now it's on the price that they are going to retrace the institutional candle, and after retracing them, our aim will be the liquidity high that is there. We want the price to take the liquidity of that high in order to shift the trend. And why basically we are looking at that? We are looking at that because of only one reason. They have made a high, low, liquidated them, they shifted down, they have liquidated the spot. All this was done to liquidate, to trap those buyers who were trying very hard when the price was in a downtrend. So now they got liquidated and now they are about to shift the trend. So that is the reason this bullish institutional candle that sell, they open to liquidate them, and then the next day they open the green candle to follow them. And now we want the price to go down, retrace these levels, and then to shift the price towards the high, and this will be our target. So this is basically our bias for that day. We want the price to shift higher. Now this has become our zones we are looking for buying here. So it's a 4 hour time frame on euro versus British pound, and now we can see that this is what we are looking for. Our zone will be clearly that zone, because that looks like a good prominent zone area for buying trade. So what the price actions traders did, they came back toward the bullish institutional candle, and as long as they tested it, they shifted higher. So this could be a good point for you to look for prominent buying trade entries at that point, because this could deliver the price towards the upside. And our target at that point, and now we find that institutional candle will be the swing high of the previous day, previous swing high that is here. So price took that swing high with a great bullish momentum. As we can see, this is what the market model looks like. A clear market model. They created the liquidity, they take the liquidity with this order, they shifted higher, they came back, they closed these orders, and then they shifted higher again. And now we are here on daily time frame. The price here made the swing high, took the liquidity, created a swing high, and now they retraced those levels and then they shifted higher, but still they did not take the high. So now as they did not take the high, we are still looking for zones inside these price actions to look for the optimal trading entry on lower time frame. So on daily time frame, what we see the price has created a lot of liquidity here as well. Price took the liquidity, did not give us any bullish institutional candle, went for lower, did not give any bullish institutional candle. Now they are creating some long wick candles there. Still no momentum for buyers here. Now, as they created this, we know that okay, they have created a gap, and now this could be our optimal trading entries. And now we have to go to lower time frame to look for entry process on these zones. The price came here, tested that low and shifted higher. Now, inside of this is the liquidity created for the longer term, and they will, if the price take this and retrace deeper zones, they will be a good entry zone for us. This is like the daily time frame. That on daily time frame we can see this wasn't a good rejection from the price, but in the future they can go below it, test those zones, and can go higher again to take the swing high, because before going up, the best optimal trading entry could be when the price take the lows as well. So it is the basically 4-hour time frame of the same move that we are looking at. And from the lower body of this move, that is here, from the upper body, we can see the price can come to that equilibrium level here and can come towards the optimal trading zones entries, and or come to more deeper zones at that area, and then can go higher. So this is basically our prospecting right now. Here we can see that on daily level, the price we are expecting on from the daily time frame perspective, we are expecting the price to take the liquidity of this zone to come little bit lower and then give us a good bullish momentum in order to take the entry. And on 4 hours, we can see this is the price data. So what we really want from the price is, we want the price to take the liquidity of zones, and then like to take the prominent liquidity of these zones, open to take the liquidity, they shifted higher, they came lower, and then they shifted higher. So if they come back to close this order more deeper, it will be a better chance for us to get involved and take a prominent buy. So this is what they basically did. They came lower, test the price, test the deeper zones after taking the liquidity of this swing low, this swing low. They came here, they took the liquidity, they came lower, and then they again showed us the bullish momentum using the 4-hour time frame candle. So as they are above the upper wick of the previous red candle, this could be our optimal trading zone, and we can set our buy limit order based on the high and set our stop loss beneath the low, which they use to liquidate that swing low here. And we can target we can target the daily high here on 0.86684 level for a price potentially take this level in order to go up again. So this will be our entry using lower time frame. Now see, our stop loss from that has become less, and we are optimally expecting the price to give that price action. So now we are basically in a trade. The price is shifting higher. They are potentially in a range again, and when the price show this price action, they basically respecting these zones and giving them the signals based on candlestick patterns and chart patterns or price action. Try them to take the sells there, and by seeing these wicks, and now they are trapping those sellers, thinking that the price will prominently take those swing lows in order to deliver the price downside. But the buyers here take part, and after that they conquered that fight. So this was example that how you can utilize using multiple time frame. That we know that the price can go up, we use the liquidity of them, these lows. We know if they have taken the liquidity, they have given you the daily institutional candle, they have went higher than this week, they have retraced this level, they can potentially take this low, which was on 4-hour time frame basically these lows. So as they came lower, by taking these lows, we waited for the price to retrace towards the levels which they opened to liquidate the daily swing low, and after retracing them, we want the price to give us bullish momentum, and after they gave us a bullish momentum, we shifted the price, opening the buy limit order, and that was a prominent great buy trade.